All right, here we are again. Hopefully I can put down something that's not completely laggy and help you guys. I'm really incredibly frustrated with Xfinity and WebEx and everything else. But you have no idea. This is not my only job. I'm sure you have an idea of that, but the rest of my life takes up a lot of time, and so when I come to you, when I come to your stuff, I'm like, okay, everything needs to work. So when it doesn't, I'm like, shit, I just set aside 3 or 4 hours to do something and it doesn't work, and it's really frustrating. But anyway, I'm undaunted. No, I don't want a damn survey. I am undaunted and I will keep trying and working. And first thing I want to do is go through chapter 3 homework, or chapter 2 homework again, and make a better tape. Oh, 2 students have submitted, 8 students not started, 6 in progress. If you have not started, you better get going. This class is going to go very quickly. The curriculum people want to make these 8-week courses now, and I'm like, are you for real? All right, here's number 1, and let's see if we're recording. Yep, we're recording. I've got good levels on my sound. I think I should be okay, and I'm up out of the way. I don't know. I'm down in Rifle, by the way. This is my office down in Rifle. I should close the door. Maybe. Come on in. My dogs are with me and stuff like that. Okay, chapter 2 homework. Here's aerosol engineering, a RASL or something. Anyway, I wonder if I should make that bigger, but where am I here? 100%? That make it bigger? Now, so these problems are 1 and 2 are the same. You just go through each one of these. The owner invested $175,000 in cash, value of $9,100, $65,000 in drafting equipment, office equipment. So these are all the things the owner invested. So the company was started with cash, office equipment, and drafting equipment. These 3 things, and the credit goes to common stock. Over on the other end of the equation, remember, assets equal liabilities and owner's equity. It's over there, so that's how that entry looks. And so then you just go down the list one by one, and it's getting you. The purpose of this is to get you to know where the debits and the credits go, and why, and it's double entry accounting. It's what you'll do on QuickBooks or any other accounting software that you use proprietarily. Land, another one. Cash, notes payable. This time they bought land, so they got, there was an asset that was bought, so you debit the asset, credit cash, and a notes payable. This is a long-term loan, I'm sure, on the land. So one by one, I think I showed the whole slide here, so you can see where they are, and then I'll go to number 2. This is the ledger. Remember, the ledger closely resembles T accounts, which I urge you to use if you're not using them. Excuse me, Yogi. If you're not using them, I'm looking for paper is what I'm doing. Oh, this drawer. You should just at each day when you come to class or when you're sitting to do your homework, it's just a good idea, I think, to do something like this. I got a piece of paper, and this is what I would do in my undergrad work when I started to. I put this at the top, right? Boom. And then I'd start doing T accounts, right? Cash, uh, debit plus, credit minus. This is going to be my cheat sheet. Well, not my cheat sheet. It's going to be my scratch paper. So I could, I can work out these problems. So everything that goes into cash, here you're doing it electronically and you do it one by one by one, but you can do it on paper and then transfer it to this if you want. However, your better memorized stuff. Nowadays they have these terms like, and they're very, I don't know, new agey terms like this is my learning method. I don't want to get into that. I just want you to learn it. So figure out how you best learn it and do it, and don't expect your prof to figure it out for you because they don't care. It's college. So accounts receivable, prepaid insurance, office equipment, all this stuff, one by one by one. And there it all is. Here's the top of it. Here's the bottom of it. If you're stopping the tape to look, it's all redundant and of course a trial balance. Now we're working on the accounting cycle. I think I said that in the last tape. So frustrating. Sometimes I want to capture what I said because some of it's good, supposed to be. But the next step in the accounting cycle, the circular cycle, you remember this? When you go to Basecamp and go to Canvas here, you can see in my, right when this is the accounting cycle, and we're going to see it in chapter 3 as well when I go through that chapter, and I'm going to go through that soon. So there's number 2, or requirement 3, I'm sorry, is a trial balance. And it's, you stop at a month, in this case, a month. All of this information goes from, what is it, June 1st to June 30th? Let's see. Oh, we just have A through Q, but it doesn't matter. What really matters is that it's all one accounting period. Whatever this period is, could be a year, could be a month. Let's just say it's a month and go with that and go, okay, this trial, when we stop the music, the first thing we're going to do is general journal, ledger journal, and then trial balance to see if the general, if the journal and the ledger were correct. And this number equals this number. Assets equal liabilities plus owner's equity, and debits equal credits. That's what this trial balance is telling you. Later on in chapter 3, we're going to get to adjustments. If you've looked at chapter 3 already, that was kind of flawed because I wasn't sharing my screen, and I'm going to redo it. But nonetheless, here's number 2. Same question. So I'm not going to go over it again. I'm just going to show you the answers here. These are my numbers. So here's my numbers, and here's the requirements, right? Trial balance. These numbers, 131 and all these, they're sort of a red herring, but not, because they go up here in 101 cash, 106. That's just your chart of accounts. If you were making up a company of your own, which you will maybe, or going to work for someone else, you would have a chart of accounts and give them numbers. I think I told you when I worked at either the Breakers Hotel or anywhere I did procurement, meaning I was a purchaser. And in those cases, I was buying for the mechanic shop. I would get the invoices, the source documents, and I would send them to accounting across the campus or across the club or across to the main hotel, as it were. And in the case of the Roaring Fork Club, it was a woman by the name of Shelley, who I loved dearly. She was really good. And I would code them. What do you mean code? The GL code for each of those items. So if I was doing spark plugs or something, it would be repairs and maintenance, and it had a GL code, and I can't remember what it was, but it was a 4-digit number. I think she used 4-digit numbers the way it was set up. And so I knew all the codes, so I would help her out and code everything for her. And we called it a GL code. It was just a chart of accounts code to let her know where in the books that went, where in the general ledger those items would go, that invoice. Okay, there's number 2. Here we have 3. I think 3 a little bit different. No, same one. Okay, here's the information. In my case, these are my numbers. Yours may be different. Oh, these are dated. So we have a 1-month period. 30 days has September, April, June, and November. All the rest have 31. March has 31 days. So prepare journal entries. This case, we have a date. So if you're getting an incomplete, you either don't have the date or the number in there. Maybe one of these is wrong, right? Make sure you're checking your work and going back and forth. And sometimes it's frustrating. So there's the rest of that one. Requirement 2 looks like this, and you can see this running balance. Again, use a scrap paper, or if that's helpful to you, or you can do it on this is fine. Whatever works. Office supplies, an asset, right? Debit to increase. Prepaid insurance, an asset, debit to increase. Equipment, rent, prepaid rent is an asset, debit to increase. Payable, liability, credit to increase, debit to decrease, right? Common stock, owner's equity, credit to increase when we began, began the company. Okay. Revenue, credit to increase. Dividends, debit to increase. Utilities, expense, debit to increase. Okay. I just, you're memorizing this stuff. It'll get easier over time once you have it down pat. And here's venture consultants trial balance. No problem there, right? You just add these things up. It should be pretty self-evident how this goes. Now, hopefully, now that you see it in form, it'll help you out. Business transactions, Hannah Benedict. During the month of September, here she goes, Hannah. And general journal, right? General journal, here it goes. And you can stop at any time on the tape and take a look at how these transactions went. We're debiting common stock for cash and office equipment to start the company, and on and on and on. Again, our general ledger, post the journal entries to the ledger accounts. There you go. Pretty simple there, I hope. These are T accounts and such and such. And number 3. Excellent, right? Goes with my numbers. That's number 4. 5 to 7 right here. We have this information at the top, accounting records of year 1 and year 2. This was a little more tricky. We've got balance sheet for year 1 and balance sheet for year 2. If you look at the information, I can pull it down. I don't know if you've seen this trick, but I can pull it down a little so you can see it here. 44,746, 24,298, 38,31. 46,023, 117,611 is the office equipment. So our total assets 236,500. So we know that this total liabilities and equity must equal 236,500 because this is a balance sheet. We know that these two numbers, this number has to equal this number. So if we get, if we're missing a number, we can fill in the blanks here, but we're not missing any numbers. 63,858 is there. 855, I'm sorry. And then total equity, 172,645. Oh yeah, we were missing a number. We had to fill in this total equity. So what we do is we take 236,500 minus 63,855, and that'll give us our total equity, right? Year one. Year two, same idea. We're going to back into total equity and no further explanation. All you got to know is assets equals liabilities plus owner's equity, and you've got the picture. All right, let's go down. We're going to use the same information, I think, so I'm going to bring it with me. Down, down, down. I can bring it down even further on this side. Yay. So compute net income for the 2 years during using the following information. Oh, you had to take this 172,645 from here. 172,645. Oh, from year one. 172,645 from right there, and put it in here. Owner's investment was 33,000 additional cash, and 31,200 cash dividends gives you the equity for year two, 277,515. Okay. So, and here's the explanation for that one, which might help you. Balance sheet 1, balance sheet 2, ta-da. And then we go to number 7, and it just wants you to do the ratio. 123,376 divided by 400,891. There's 400,891. This is year 2. And total liability is 123,376. There's that number. So you've got both numbers, off you go, right? And all good. So that's number 7. Yes. 5 to 7. 8, I think, was very simple. Okay. Are you going to go? Are you going to go? Doesn't want to. I'm frozen. Please don't freeze. There's 8. Okay. 73.5 divided by 377. How did we get those numbers? Well, here we are. Debt ratio 73.5 divided by 73.5 year 2. So I got to add up. In this case, I got to add up all the liabilities. So I have AP and notes payable. I have these two numbers, 33.5 and 40,000. That makes 73,500. Total assets, I add all these up. Cash, AR, office supplies. Here we go, right down the list. Trucks, building, land. Those are all assets. They're all assets. So I add all those together. It gives me this ratio. Just getting you to know what's an asset and what's a liability. And finally, oh no, I got 9 and 10. Yeah. Here's 9. Yeeman started an engineering firm called Min Engineering. This is what happened in this month or year or whatever, May, which included his initial investment of 18 in cash. So 18 in cash, 37,600, office supplies 890. So you can break it down into a trial balance pretty quickly, right? It's just getting you to know where things go. Rent expense 7540, right here, right? Where do these things go, and which are debits and which are credits? All right. And here's number 10, account balance. They wanted to do the cash account. You got you to do it one by one. This trips up a lot of people with this cash thing. When you're doing it on your own, it gets confusing. That's why that's what this is all about. write it down and see if you made a mistake, and go back and check yourself. It's also why we go to class. So go to class, come to class, and at least gripe at me, and we'll try to answer your questions. But really, working with others is so valuable. And it's not, it's, we don't have like I don't assign teams and make you work with people and do all the crappy stuff that will come later on in business school because I'm a lone wolf. But I love sitting in groups. As long as there's no force involved, I love sitting with people and doing work like this. I love working. So that is chapter 2. I'm going to leave you with that, and I hope everything worked. I'm going to stop the recording. I love you all, and I will see you on Monday.